Have you ever missed a trade simply because you weren't in front of the charts? You might have been watching this particular market all throughout this chop, waiting for this particular arrow to print, but when it does print, say that might have been a day you stepped away, maybe you didn't log into the markets, or you simply didn't even look at XLK on that particular day. Well, in today's video, I'm going to show you a way to solve for that, solve for a way to not miss trades. You'll take your trading strategy and we can automate it using some very simple steps. This takes that set it and forget it idea and really puts it on steroids where you can use some of the powerful features in ThinkOrSwim. Now here's the simple 3-step process we're going to follow. We'll start with the trading setup, and I'm going to use the 1-2 punch setup here, which I'll use the bare bones indicator as our starting point, the momentum cross, which is nothing more than the 3 EMA crossing the 8 EMA. Very simple code as our starting point. We're going to take some visual observations, and we're going to turn those observations, which is our 1-2 punch setup, I've detailed this in previous videos, and we're going to turn that into an indicator. As soon as we turn this into an indicator, this forces us to go from visual into code, something that ThinkOrSwim can recognize. Now, once we have step 2, our indicator built, we can then move on to step 3 quite easily, and that's building an automated trading script, which forces us to now take this indicator, simplify it to its core, and tell ThinkOrSwim exactly what are the buy and the sell conditions that we want to be looking at. We can then tie the order to those buy and sell conditions, which allows you to not need to sit there and manually wait and watch for this signal to occur, but instead, whenever you find a chart, now here's a snapshot of a picture-perfect example of the setup inside of the S&P on a daily time frame chart. What we have here is our first bullish momentum cross. That's step 1 of our setup. That tells us that the 3 EMA has crossed above the 8. We expect momentum to be to the upside. Now we give this a little bit of time here. That amount of time we can decide when we write the code, but after that amount of time, we want to then see a bearish momentum cross. That's this pink dot which tells us that 3 EMA has now crossed below the 8. This is the first sign that, hey, okay, the bears are still hanging around, but now we get to test them. We get to see, are they weak bears or are they strong bears? And this is still before we've put capital at risk. Now, if they're weak bears, they should not be able to push price down much lower than the low of the candle in which this momentum cross happened, aka that momentum shouldn't really push to the downside. The way we measure that, we can see this bullish momentum cross shortly after, where we can see that the bulls come in, defend price, and now it's the second bullish momentum cross that we're looking at the entry, aka the 1-2 punch setup. Now, this looks really easy to recognize visually, and I'm sure if you scroll your chart, you'll be able to find plenty more examples. However, when we need to turn this into code, you'll find that's a little bit more challenging. And that's that first process we're going to do right now. We've taken the indicator, we've turned that into some high-level requirements that I just described. Now let's turn this setup, instead of just one indicator which plots these dots, into an indicator which plots the setup, aka an arrow at this particular bar. Now to do that, I'm going to copy paste all of the momentum cross indicators code as my starting point. Click create. I'll bring this here so it's easy to see this setup side by side, and I'm going to paste this in. Now I don't need to see the dots plotting inside of this particular indicator, so I'm going to remove all of the formatting, and I'll change these variables from a plot to a def. Right now we're checking if the CMA crosses above and then setting this equal to where we wanted to see the dots plot, and then we use a double nan, which is not really a good idea when you're trying to build an automated trading conditions. You want it to be as clear with ones and zeros, aka true or false. So I'm going to remove the double nans in both, turn them into false, and I'm going to turn this low -5 times tick size, which is where we wanted to see the dot plot, instead to just be the value of true. So if we have a cross above, then true for the up signal. If we have a cross below, then true for the down signal. And instead of cross above, one other thing I'm going to do here is use the greater than or equal to sign and set this to EMA 2 on the previous bar. It should have been less than. So we're saying on this current bar, the EMA should be greater than, aka the 3 EMA should have crossed above the 8 because on the previous bar it was below. This is a simple way to turn this cross above and cross below into, I think, a little bit more concrete conditions. Again, less likely to have glitches. You'll notice when I build this indicator, that's what I have in mind. The way that ThinkOrSwim has the least glitches, because we're going to put this into an automated trading condition with live money on the line. So this cross above, cross below, if there's any chance it can cause an error here, I'm going to get rid of it. Now I'm going to simply copy this and then reverse the signs for our cross below. So I'll say if we are less than or equal to, and in our previous bar, we were greater than. Now we'll get one error here which says at least one plot should be defined. So let's go ahead and start with translating our setup here. The first thing we can say is our bullish momentum cross. So I'm going to say 1-2 punch setup here. And then let's type in bull conditions for our bullish ones. And I'll say def first momentum cross bull. And this is simply going to be equal to whenever we have the up signal. That one is quite obvious, right? So that's when we see this up signal, that's when we have our first momentum cross. Now we have our second momentum cross in which some amount of time has passed. Now, how much time you can choose? The number I like to use here is 20 because I think 20 bars is a reasonable amount of time to have let the bulls continue drifting in their direction before letting the bears come in and defend. So what I'm going to say here is second momentum cross bull is equal to sum, except this time we're going to check the sum of our first momentum cross. So from whichever bar this is, we're going to check the sum of the previous bars to see, do we have a blue signal here, a blue dot, aka a bullish momentum cross. So I like the number 20, so I'm going to use 20 and I'll say, is this equal to 1? If that's equal to 1, then return true. And on the same bar, we would want to see our bearish momentum cross, right? The down signal. So I'm going to also add that in here. I'll say and down signal on the current bar. So we're checking, have we had a blue bullish momentum cross to the upside anytime over the past 20 bars? And are we seeing a bearish momentum cross on the current bar? Now I'll bring in our third momentum cross bull, which says sum, and this time we can look at our second momentum cross. And again here, some amount of time usually passes. In this case, no bars passed, but we can see that some amount passes. But if you think about it, naturally this amount should be, the first amount in which we let the bears defend should be greater than the amount in which we let the bulls defend, right? We want the bulls to come in much faster and sooner, especially if we're looking to trade to the bullish side. So here I'll take that 20 and I'll turn it into something like a 7. Again, an arbitrary number. If you want to make it 5, go ahead. Those are essentially the thresholds that you can adjust for how sensitive this indicator will be. So in fact, let's actually pull those out as variables before I continue. So I'll say input second momentum cross bars, and I'll set this equal to 20, and I'll say third momentum cross bars, and we can set this equal to the 7, but this way you can change them very easily if you'd like directly from the settings menu. So now I'll say second momentum cross bars and third momentum cross bars for our 7 here. And for our third one, we'll want to see the up signal since that's when we're looking for the bulls to resume, right? So we've essentially chain linked 3 different momentum crosses to create one master signal. Now let's test this. So I'll say add chart bubble. Let's plot this only when we see this third momentum cross bull condition being true. We'll plot this at the closing price. Inside of the chart bubble, I'll simply just plot that value. And then let's make this a color.yellow. This add chart bubble function is a neat way to debug your code and test along the way, incrementally test. Now, if we've done this correctly, we should see that chart bubble plot above this particular candle. Let's see if that happens. And just like a magic trick, we can see that now we have this chart bubble plotting where we would expect. So that means we've been able to target this bar. And the fact that we've targeted this bar means that we can tell ThinkOrSwim that, hey, whenever this bar happens, go ahead and buy. Now what you'll notice is this bar accounts for a lot of false negatives as well. There's occurrences like this one where we have a red candle. Well, that doesn't make sense. This is a momentum-based strategy. We would want to enter on a green candle. So we can add in some of these small little things to essentially fix the code and make sure that these signals are plotting where we would expect. So I'll say next condition for all of our bull conditions. This must be a green candle. For a green candle, we know that the close must be greater than the open. We don't want this to be a doji. So once I say that, I'll add this in to our add chart bubble, and we can say and green candle. And here I can say buy instead, since essentially that's what we'd be looking at. And now we've been able to eliminate some of that false noise. Let's keep going through these, seeing if there's anything else. As soon as you get into intraday activity, you'll find that this gives you way too many signals, and you want to find a way to eliminate bars like this one, along with this negative momentum where we had the bearish momentum cross, the bears actually pushed price down lower. So those are the next things I want to solve for. Now, one simple way that we can solve for that is by using the ATR along with the low value. So what we need to do here, I'm going to add some space. We have our green candle condition. Now let's go ahead and capture what is the low at the second momentum cross. So I'll say low at second momentum cross. And if we have our second momentum cross bull condition, which is when we have that down signal, all we're going to do is capture the low price at that moment, and we're going to carry that value forward inside of this variable low at second momentum cross. What that allows us to do is, if I come back, and nothing should show right now, but I come back to our daily time frame, we look at this example. What that should allow us to do is take the low at this price and keep comparing it to the next bars before we see this buy arrow. So in this case, we saw that buy arrow and everything passed, but otherwise we want to compare it, that low, to make sure that it's not within a set amount. And what is that set amount? Well, let's come in and define that right now. So I'll say def low condition. And here what we can check is if we have our lowest low within the third momentum cross bars. So this is now taking the low between the bars that have elapsed since the second momentum cross to the third momentum cross, and it's getting what is the lowest price in that period, aka how far deep did sellers push price, and we say, is this greater than or equal to, and we can bring in this low price now, and we can make sure that this has not gone, let's say, much more than what? Maybe 1 ATR? Does that sound fair to you? So we can say, has that gone below 1, or in fact, below, I'll specify this, so I'll say 1 times ATR. And close this out. I think that should compile. Then 1, else 0. Let's see if this, I might be missing a parentheses. There we go. So what we've done here is we've said, okay, if the low, for, in this case, the past, we have 7 bars. So if the low for the past 7 bars, since this is looking only whenever we have that last final bullish signal. So if the low since our second bullish momentum cross is greater than or equal to where we had the low of our second momentum cross and we're letting it go down 1 ATR, then we return true, else we return false. If not true, then we will be able to weed out some of the places where the bears actually push price down lower. So what I'm going to do here is, let's say, and low condition. I'm going to purposely say where it's not true. So we can say ignore, and I'm going to say color dot red here for these chart bubbles so we can spot these a little bit quicker to see, do we actually want to ignore some of these? So if we take a look at what's happened here, we're seeing this ignore chart bubble because what we had is we're comparing the lowest low from the past 7 bars, which in this case, we're looking at this low price, and we're comparing it to the low price at the second momentum cross, and we're saying, hey, is this value greater than or less than 1 ATR? If it's less than 1 ATR, then perfect. In this case, it's greater than 1 ATR, which is why we're saying, hey, we want to ignore these values. Now you'll notice in some cases it gives you a lot of false negatives, but in other cases it saves you from some heat. So you decide if you find adding in this ATR filter to be a good addition to your trading. Now, the fact that I said that hopefully should trigger the idea that, hey, this should mean it's something the user can control. So we can say something like ATR check, and we'll set this equal to yes so the user can control it. And now we can add that in when we build in our final condition, which incorporates our low condition value. Similarly, I want to make sure that we don't enter on a large big bar. So I'm going to say def range, and I'll say high minus low, quite simple. And we'll make sure that this high minus low, so our entry bar, is going to be less than or equal to 1 ATR. And what I can do here is make this absolute value so that it works for both sides. So range will not need to apply for just our bullish conditions because we're going to need to create a clone for the bearish side, but range can be agnostic since it's pulled out. So here I'm going to say condition 3, checking to make sure our entry is not greater, or to make sure our entry candle is not a big bar. Let's just make this human readable. So that's what condition 2 is doing. Condition 3, excuse me, and then our bull conditions are all, I think, put in. Now let's bring in what I think should be our actual buy arrow here. So I'll say plot bull, or buy rather, since we're going to connect this to an automated trading condition, and I'll say plot buy is equal to whenever we have, in this case, our third momentum cross bull, and we have our low condition being met, and we have our range condition being met. I'll say buy.set painting strategy dot boolean arrow up. Let's close that out. And let's make this arrow really large. And I'll come back to that daily time frame. And now what we have is that setup codified for the buy side. So let's pick that same example we were looking at in 2023. And now we notice that this example has disappeared. Let's see why it's disappeared. If we were to strategically remove each of these conditions, we can see which one might be a little bit strict. So let's remove range first here. So I'll remove range. And as soon as we remove range, we can see that we have this buy arrow plotting. So it's telling us that, hey, this 1 ATR check for at least the buy side might be a little bit tight here. You might see a little bit more than a 1 ATR. Let's see if we give this, I don't think a 2 ATR is fair. That feels like I'm being quite generous with how wide we let that candle go in terms of our overpay. So let's see if we maintain a 1.5 and then we add in range one more time. This allows us to still maintain candles like this one, which I think are still reasonable candles. Now we need to clone this for our bearish side. So I'm going to very quickly paste this in, and I'll say our bear conditions now. And we just change this bear signal, or a bear a variable, and then change this to a down signal here. I'm going to change all of our variables to be bear. Our candle should be red candle, and close should be less than or equal to open. And here we can plug in our sum of our first momentum cross bear should be the same variable equal to 1, except this time we're going to want to see an up signal. And then our third momentum cross bear should be referencing now the second momentum cross bear variable, looking over the past 7 bars, checking if that's true, and this time looking for the down signal to resume the downtrend. Here, we're going to check our high at the second momentum cross, where we'll say if we're at the second momentum cross bear, then save that high price, else continue carrying forward the value at this variable. Then we'll check in our high condition. We'll check our highest high over the past third momentum cross bars is greater than or equal to, and in this case we're going to check rather less than or equal to our high at the momentum cross, and in this case plus 1 times this ATR, and then our range stays the same. We can create a plot sell third momentum cross bear. This is our high condition now, still with the range. We're looking for this arrow to be a down arrow, and this is going to be the sell. Click apply. Let's make those arrows large too, just so it's easy to see. And we can fix that inside of the code really quickly. Whoops. Sell 5. Okay. And now you can see all of the bearish momentum crosses that it finds as well. There's a few more changes that I want to make. I want to pull out all of these 1.5 values, and then we need to add in the ATR check, tie that in. So I'm going to say input entry ATR, and we'll set this equal to 1.5. And then I can tie that into our max here. And then we can also add in a check with the ATR check where the ATR check touches this range. So range will only come in if the user has selected yes on the ATR check. And high condition should only come in if the user has selected yes on the ATR check. Right? So for both of these, what we can say is def use ATR bull if ATR check, then if ATR check and low condition and range, then 1, else if no ATR check, then 1, else 0. And this way, what we've done is we've checked, okay, has the user said yes to the ATR check? If yes, then both of these conditions need to be true. If the user has said no to the ATR check, then simply return true. Otherwise, if the user has said yes and these conditions are not true, then return 0. And then I'm going to clone this one more time for use ATR bear. And here we'll change these to the values that we have on our cells. So high condition and range, and then everything else should be the same logic. And now I can replace this to use ATR bull and use ATR bear. And let's also set line weight. I think it's line weight, or it might be line. Oh, there we go. Set line weight. And then cell.set line weight. Now that we have the indicator built, let me show you how to use it. I like to use this in tandem with another indicator. I personally like the volatility box models, but you want to find a reason where you're looking for this trigger to actually come in for this momentum switch. So with what we did, we need to now give our indicator a name. So I'll say TI underscore, simply just give this the name auto. And it's the plots, the buy and the sells that we can reference when we need to place the order. So let me give you an example. Let's say the Dow is breaching our volatility box models and you see it on our live scanner. Now you know that the Dow looks good and you're saying that, hey, whenever this momentum reverses on that 1 minute time frame chart, automatically get me into the position. Now typically you would have to sit and wait and watch after this breach all the way up until that were to actually happen. That's a long amount of time. That's almost 45 minutes that you have to just sit there, wait, and watch. Instead, what we can do now is, let's say you had seen this happen and you're at this moment right here in time. You simply then come in, right click, and select buy or buy custom if you want to add in an OCO bracket for stops. Now once you select that, you'll get this menu pop up at the bottom. Now select the settings icon that you'll see hidden on the right hand side for the entry order. That will pull up this order rules panel. Now inside of order rules, adjust your side, your quantity, make sure to use something that you're comfortable losing, especially if this is your first time with this automated trading condition. Start in paper money, then start small, and then go from there. Now after you adjust the quantity, come into the conditions, select symbol, which will autofill to DIA, or the symbol that you're on. Underneath method, select study, then select edit. And here, what you're going to do is simply say plot signal is equal to TI underscore auto, and that you're referencing the function, the indicator that we just created, and you're saying simply buy whenever auto's code tells us to buy. That's how we've linked all of the code that we just did. Trigger if this condition is true, whatever time frame you're on. So in this case, the 1 minute time frame. If you want to include extended hours or not, click OK. And mind you, that's extended hours for the calculation. So if you're using extended hours on your chart for your calculations, use extended hours here. You can also add in a cancel condition, whether it's a day or a time if you want to avoid the lunchtime hour. Link your limit. I like to link it to the bid since I'm looking to buy. And if you want to be a little bit greedier, you might even say, hey, take the bid and decrease it by a set amount just to try and get a little bit better of an entry price. Does that really matter? Not really. Then click save. And for the link here for the 2 remaining orders, you can simply click this drop down and select average price, and this will place the buy and sell stop orders for plus or minus $1, which you can adjust to whatever you like, maybe $2 if you want that. If you were wanting to place this order GTC, just place that GTC. That might be useful for swing trading or for daily trade ideas. For day trading, you might just be using day here, like we're doing right now. And so we can keep it at day, and then click confirm and send. Make sure your quantities are the same here, by the way. Confirm and send. And now ThinkOrSwim would, if you were in this moment, be waiting automatically for whenever once this breach happens for this particular condition that we just coded in to occur. So it would place the order at this moment, and then it would place the trigger by we said $2 above and then $2 below. Now that was a little bit time consuming. We had to do that whole right click, drop down, etc. So one way that you can make this a little bit faster, which I'll show you in just a second, right click, buy custom, and let's build this one time, assuming that this is going to be a template. So I'll say DIA, and this will create, let's say this is going to be on the daily time frame. That's going to be your template for swing trading. So now I'll say plot signal is equal to whenever TI auto, so the indicator we just created says buy, go ahead and buy, trigger whenever this is true, and I'll leave this on the daily time frame. And here, what we're going to do, link to the limit, and since we're on the daily time frame, get a little greedier, adjust your quantity, time enforced, GTC now, right? Since we're pretending that this is a swing trade now, ignore this chart, GTC, average price, and here you might be getting even greedier, right? You might be saying, hey, I want to go for a $10 profit for $2 for your stop, whatever that is. And now what you might be able to do is save this as a custom order template, and I'll call this sample order. Sample DAO order, click save. Make sure your quantity is the same. Otherwise, you'll get the error that I just got. I'm going to save this as my sample DAO order. And let's try that one more time. So I'll say buy custom sample DAO order, confirm and send. And now you see how much faster that was. So that's a way to make your process of placing orders inside of ThinkOrSwim much quicker, much faster, and taking your basic setup and turning that into an automated trading strategy where ThinkOrSwim is doing much of the heavy lifting for you. I hope you found this video helpful. Wishing you a happy new year ahead filled with trading success.